Welcome back. And we're joined by Sunil Subramaniam as well, market expert, joining us this morning. Sunil, what do you do in a market like this? Give us a sense. Likely there'll be some softness in markets today. Should you buy that? Should you wait for more clarity? What would you do?
No, you should keep buying, but small amounts, stagger them. Don't go in all in today. But clearly, what we can say is yes, Mr. Trump's tweets and Iran's responses will cause volatility. But you see, oil is not reacting too badly. It's already around 95. So clearly, a lot of the bad news is discounted in the price, but that doesn't mean we are ready for a surge. And especially, I'm saying that if you see FIIs last week, they started buying gradually by the end of the week. So clearly, they are also taking a position that the worst is behind us. DIs, on the contrary, have been booking profits and pretty heavy profits because they are preparing for the earnings season. So they will redeploy as you get clarity around the earnings season, right? So a rally of sorts last week was most of retail HNI driven, who also felt the market was oversold. But the Friday's good news, I think, has petered out over the weekend in terms of the claims and counterclaims on whether there is talks in Pakistan or not, ceasefire is on or not. So I think that, and 22nd is the official date for the end of the ceasefire. So I think that this is a time when I think you can be reasonably confident that the market is close to a bottom, unless there's a very dramatic military development in the war. The blockade-wise, what America is currently fighting it, I think an economic matter of trying to starve Iran of oil and food and all that, that's okay, in the sense that the damage to US from whatever ammunition, soldiers and all not be there. So market has taken that into account. Only if there's a military escalation and US puts boots on the ground, you could probably see a negative. But bear in mind that there is a small probability of that happening. Nothing is ruled out, given Mr. Trump and the way he has been changing stance every couple of days. I would say that given this, that there is DIS building up firepower to buy in the earnings season, they will come in and support it at some stage when there is clarity. So right now, since they wouldn't be fully supporting, FIs have just started coming in.
Right.
It's the time to accumulate.
Absolutely.
Right.
Right. Sunil, I wanted to talk about ICICI Bank and HDFC Bank. And now that both the majors have reported and largely been a beat broadly on all counts, despite global headwinds, I wanted to understand, does this Q4 now meaningfully change the tilt back to private banks? And out of ICICI Bank and HDFC Bank, which one do you favor?
So I would not like to speak stock specific.
Sure.
But I'll talk about the earnings itself. Yes, they beat guidance and they were good. But also you got to look at the fact that there is definitely pressure on deposits. That's clearly seen because while HDFC had a good deposit growth, it's come at a higher cost and the NIMs are slightly under pressure. So to that extent. Second is the good news from both the results are the fact that credit is picking up, especially in the SME and the business banking side. So which means it's good news for the overall economy. And that augurs well that if this is replicated across the curve, then you will see good economic growth following. Part of this credit growth could be due to higher working capital requirements because oil has surged a lot and most companies who use oil and all that need more working capital now. So that could explain it, but it's a good indicator for the economy. But again, another good news from both the results is the NPA levels are fairly quite low levels and indicates that corporate health is good. So a lot of good reads for the economy from these results. And finally, because of the deposit pressure, you can actually say, I'm going to say something a little bit controversial, that actually whether RBI does a rate hike or not, banks are going to do rate hikes in the economy because they have to hike deposit rates to keep up with the credit requirement, and naturally lending rates also will sit up because the balance is on the favor of banks because people are borrowing more. So yes, to find your question in terms of will this mean that good news for private banks and this? Yes, because it's a summer, consumer durable sales like air conditioners and refrigerators should pick up, which are all essentially EMI driven, and just not private banks, even NBFCs of this would be able to pick up this slack. And the GST cuts, mind you, have not yet played out in consumer rules. This summer is the key. So yeah, I would say that definitely their loan book growth should be good in this quarter. The NPA levels are quite comfortable and deposit rates will go up and lending rates will go up. But I don't think the economy is sensitive to that. So effectively, banks are doing a round of rate hikes and not waiting for RBI.
Sunil, we've seen a nearly 2,000 point rally from the recent bottom. Do you think that from here on, the market are going to look at the earnings very carefully before pushing the index up?
Is that for me?
Yes.
Yeah, no, definitely market will, especially DIS, will look at the earnings before taking a call on which sectors to back. And this earnings season is very important for 3 or 4 reasons. So first is that this quarterly earnings really doesn't matter. The reason I say that is everybody knows there's a month's impact of the oil price on a lot of companies and sectors. Analysts would have analyzed it threadbare to death, and they will have a good sense of the consensus of what the impact is likely to be on company wise. So actual QOQ earnings drop or even YOV drop, market would have factored in, and not so it will discount that. But the guidance for the future quarters and for the year is important. Why? Because it's the beginning of the financial year. You will re-arrive at your market index consensus EPS estimates for the next year. So the 1 year forward PE will get readjusted as the earning position goes. So that's the second. The third, like I said, what's the commentary like? How are they looking at the further continuing impact of war? Are they going to face margin pressure and try to boost sales, or are they going to protect margins and not worry about sales? So each company sector, that knowledge is important. And finally, private credit, the capex expansion. What are plans of companies around that? In terms of, especially for example, auto, the good boom in auto sales. So are they going to be expanding capacities and those kind of a news flow, because private capex could be the next driver for the economy in the shorter term. So very important earnings seasons from that perspective. So I would expect that both FIS and DIS would closely watch it and make their next move sector-wise, company-wise, only when you have a significant portion of the bellwethers in each sector having reported, and they get a kind of feel for how it's going to look.
ICICI Bank, HDFC Bank, what's the tilt towards?
Yeah, towards ICICI Bank, I think so far in the last, 3 weeks approximately, ICICI Bank has done reasonably well. The stock has managed to climb back from that 1200, sub 1200 mark towards 1350-ish kind of a levels where it closed on Friday. So that's the one which is looking fairly better as compared to HDFC Bank, which has just rallied from 750 levels thereabouts towards 800, 820 kind of a range on the upside. So I think looking at this relatively, ICICI Bank seems to be a more stronger stock. And I think also, if I'm not wrong, on the daily charts, the stock on Friday managed to come back above its 50-day moving average. That's another positive for the stock in the near term.
Kunal, if you look at HDFC Bank futures, roughly 23,000 odd crores of open interest position there. The numbers were very lukewarm for HDFC Bank. How do you think investors should look at that today?
So generally, a very high open interest built up is more considered to be on the short side, but whether it's on the options, whether it's on the futures side. So which means we'll have to take this as a tale that maybe market participants were not expecting anything big, positive for the stock, and since it's delivered maybe at par or below par expectations, there could be a possibility that the stock may fall. And what will happen now is that once the stock starts to fall, the open interest will start to unwind, because traders who would have shorted the stock at slightly higher levels, they will start to cover their positions.
Within the Nifty though, where is it that you're spotting sectoral leadership, if at all?
So the only sector which has been very, very strong, I think the last 3 weeks has been real estate. That's the one which has done phenomenally well. I think double-digit gains, 15-16% odd, for the realty index from its previous swing lows. The second best performer, ranks up to the CPAC index or the defense pact. These stocks have also done very well for themselves in the last 3 weeks. In fact, many of these defense names, the likes of HAL, etc., they've come back almost 15 to 20% higher from their previous major swing lows. So that's another pocket which has been doing fairly well for themselves.
Okay, let me in fact go across to Meryl, talk about some stocks that you want to keep on your radar for this morning. Meryl, talk to us about this.
Yes, here are a few stocks which are going to be on our spotlight today. Starting first with Ultratech Cement, the company is in focus after adding another 8.7 million tons per annum of cement capacity, taking its total domestic grey cement capacity now to up to 200 million tons per annum. Also in focus today is Trend. The board has scheduled a meeting on the 22nd of April in order to consider a dividend as well as a bonus issue. This could be the company's first bonus issue since its listing, And the board will also be considering fundraising via rights issue, so that's going to be important to watch as well. Also in focus today is BHAL, after the company's reported a provisional full year FY26 turnover of up to 32,350 crores, which is up almost 18% on a year-on-year basis. They've also reported a strong order book inflow of around 75,000 crores for the full year. Also in focus is Dredging Corporation of India. They have signed a 5-year memorandum of understanding along with Indian Oil, which is valued at 2,157 crores in order to ensure steady fuel supply. In the infra space, EMS has secured L1 status for 2 sewage infra projects in Varanasi with a combined value of around 209 crores, which is going to be executed over an 18 to 24 month period. And we've also got InterArc in focus today. They've received a small but positive order worth 60 crore, which is going to be an important one to watch as well. In the pharma space, Aurobindo Pharma is in focus. They've received the US FDA's approval in order to launch an over-the-counter cough suppressant, which targets a $138 million market in the US, with launch expected in the second quarter of FY27. Also, a focus in the pharma space is OneSource Pharma. The company has received renewal of its EU GMP certification for its flagship facility in Bangalore. And yes, we've got a lot of stocks indeed on our radar today, so keep a close eye.
Okay, thank you so much for that, Meryl. One of the underperformers, viewers, over the last maybe since the 30th of March is surely pharma. It's one of those which has just not picked up steam, despite the markets doing very well for themselves. Kunal, your take on pharma? Would you continue to stay away from a technical standpoint?
Yeah, absolutely. I mean, you don't have to bank on every sector at a point when the sector is in an underperforming zone. And I think looking at the large cap names, the likes of Sun Pharma, in fact, on the daily charts, has actually given us a sell kind of an indication on the short-term time frame. So that indicates that the weakness which is there from the pharma major, that will likely continue. You look at the underperformance which is there with the likes of Cipla, that's still hurting the sector overall. The stock is still not being able to perform or come back towards its even the long-term moving averages. I think there are only two better performers which have done very well within the pharma pack. One of them is Glenmark Pharma, the stock which has come back closer to its lifetime high levels, or just I think in the breaking distance by a couple of percentage points from its lifetime highs. And the other is, I think, Aurobindo Pharma. That stock has done phenomenally well to come back to 1360-80 levels in the near term. So I think these are the only two exceptions which have done very well. And then when you try and look at the beta of these stocks also, they are relatively higher as compared to the usuals of Sun Pharma, etc. So that tells you that the markets have a slight tilt towards the high beta spaces and the high beta stocks within even maybe a low beta sector like the pharma index.
Kunal, does the move on FMCG from Friday have more legs to it?
Yeah, I think FMCG could be something which is starting to look attractive because, after last week's move, Colgate making a very strong comeback, Britannia showing signs of strength, HUL, I think coming back to that 2200 breakout point, which has been a resistance of a sort. So, what happens first is that whenever these stocks come back into recovery, an initial pattern of lower highs and lower low that is broken out. Initially, there is a sign of optimism or sign of strength, where the markets are taken by surprise. And then once slowly and steadily position starts to build up, and when traders realize that the risk reward still, after this price jump for many of these FMCG names, is fairly attractive for the medium to long term, that's where the delivery money starts to enter into these names. So I would sense that the initial spike or the uptrend is now behind for the FMCG stocks. There should be a scope where these stocks will stabilize from here on, and then delivery buying shapes up, and that should, I think, lift the stock prices higher further. That would be a little bit of a slight elongated process because FMCG as it is a sector which moves very, very slow and gradually.
And we saw some very sharp moves in defense as well. Let me come to defense in just a minute. In fact, let me go across to Sunil. Sunil, your views on FMCG, because it's an interesting pack. You'll have Nestle come out with numbers this week as well. So you'll likely see some rub off, some influence of the commentary as well as the numbers on FMCG. What's your sense?
My sense is, again, if you go back to the bank results and ICICI Bank and HDFC, there was a strong rural pickup in terms of rural demand and credit, which augurs well for the FMCG. And second is that the fact that the monsoon is coming a bit under long-term average as per indications means that food prices are generally going to trend up, plus the effect of the war in terms of gas for urea. So when farmers' incomes goes up, right, that's actually a positive for rural demand. So I think FMCG will see a good demand during this quarter, but at the same time, cost pressures will be there because they're also dependent, like biscuits is dependent on wheat and those kind of, so their input costs also, and soaps and all of that do depend on crude related derivatives. So there's going to be a good top line growth, I would say, expectation this summer, but margins will also need to be carefully watched. And like you said, the bellwether companies are a key for the move. But I think the FII turn from selling to buying, slow though the buying may be, would probably be concentrated in the FMCG because it's a safer sector for them to play. So a mix of these factors, I would say, and I agree with Kunal's view that after the rally, it will stabilize. But the next trigger would be the bellwether earnings and the guidance, which will again may give it a next leg up, depending on the other parameters that I spoke about.
Sunil, scope for margin, scope for valuation multiple expansion here in FMCG possible?
Valuation multiple expansion is tough. Okay, it's got to be driven by earnings. I don't think you can expect a valuation unless the war ends and the FIs come back. Then they will pay a premium for India's FMCG sector for its safety aspect. So it's very, very geopolitical related from a margin expansion. But otherwise, domestically, it will be earnings driven.
Sure. Okay. A couple of companies within the defense pack which were in focus on Friday on the back of a new approval that they've got. Let me allow Karan to dissect that. They've been granted a license for manufacturing defense weapon systems, including ammunition. Karan here with all of the details.
All eyes are on the defense sector with a specific focus on two companies. Two companies have received the license from the Government of India to manufacture arms and ammunitions. Yes, we are talking about Apollo Microsystems and Zen Technologies. Both companies have a market cap of 10,000 to 14,000 crores with a similar level of order book. As far as Apollo Microsystems is concerned, the license has a lifetime validity wherein the license authorizes the company to manufacture, assemble and proof test the high-value strategic weapon systems and ammunitions like missiles, torpedoes, underwater mines, aerial bombs and rockets. Remember, the company has two manufacturing facilities in Hyderabad already in place, and on that note, the company moves now from being a provider of embedded systems and subsystems to an end-to-end platform manufacturer. The company's order book as on 31st December was close to around 1,300 crores with a book-to-bill of 1.7 times the trailing 12-month revenue. Remember, the company has already guided on the growth rate of revenue. The company is penciling in at least a compounded annual growth rate of 45 to 50% over the next 3 financial years. And the management had recently stated in the latest con call that the company is likely to get large cap weapon system orders for which the company is already geared up. Followed by Zen Technologies. The license authorizes the company to manufacture cannons. The company operates a dedicated research and development and manufacturing facility in Hyderabad again, and the company is establishing a new facility in Goa for geographical diversification. The order book of the company as on 31st of Jan was north of 1,400 crores with a similar book-to-bill ratio of 1.6 times. On that note, the company is set to record its highest turnover in the company's history in FY27. Now, from a valuation standpoint, an important point to be noted here is that Apollo Microsystems trade at a P which is almost double of Zen Technologies. And finally, there's a company named Tembo Global Industries with a market cap north of 1,000 crores that has also received a similar license to manufacture ammunition of various calibers. On that note, do watch out for Apollo Microsystems and Zen Technologies.
Okay, yes, big ones there. In fact, we're going to be chatting with the management of Zen Technologies in just a few minutes from now. For now, we're going to take a very quick break. Come right back for more. Back with the market right here on ETNOW. I just want to check in on what Asia is up to because oil futures definitely are seeing a bit of a spike up, and that's the case with the other natural resources like natural gas as well. Brent is now at 95.31 as we speak right now. What about Asia? Was standing ground the last time we checked and still holding on actually. Both Hong Kong and Shanghai are latching on to their gains. Japan as well is holding steady by almost 1%. Some of the periphery markets like Australia, though, have dipped down a little bit. The gift nifty then still sticking by with its gains, still holding up, although it's just a tad bit lower from where it was about half an hour back, was holding up around 9,900 odd points. It slipped 10 points from there, but that's okay. We're still latching on to that 24,450 level for the futures. Still in conversation with Kunal Bothra as well as Sunil Subramaniam. Kunal, some of the other names which, are making a comeback, DMart, for instance, the most beaten down, underperforming of the names, finally making a dash of about 5% on Friday. You sense further headroom?
Yeah, I do sense further headroom, and I think the movement for DMart actually started off much prior to when the markets bottomed. I think 3 or 4 days prior to where the indices bottomed out. So this was a case where DMart started to move on its own when the stock price was maybe deeply oversold, or when there was some positive developments in terms of the news for the stock price. But in the bottom, which had happened for DMart at 3,600 levels, that was the point where the stock was hugely oversold. We looked at the RSIs, we looked at the weekly RSIs, the quarterly charts for DMart. The stock ended a major phase of a price-wise correction and a time-wise correction for itself. Now on the way up, the stock has crossed back above its 200 moving average. And for a stock which has been dropping below those long-term averages for maybe the last 6 months or so, to try and make a comeback in just a matter of the next 2 or 3 weeks requires some sort of a strong buying potential, which we saw in DMart. That's why I would believe that the stock would probably see a further move on the upside. And as I said earlier, that now what could happen is that many of the stocks would slow down the pace of rally, but the trajectory for these stocks would still be on the upside.
Kunal, you saw broader markets outperforming even as the Nifty was gaining last week there. The small cap index, the mid cap index. Do you see enough rally or steam there in these two indices and the companies there?
Yeah, I think I strongly sense, because so what happens is the first phase of the market rally and the recovery, if it's led by large cap names, then people are going for safety rather than going for returns. When the rally is led by small caps and mid caps, there is an expectations that maybe the worst is behind. Now let's hunt for returns. So I think we are in that phase where the last 3 weeks, markets have started to chase for returns. And that's why you're seeing so many stocks. So it's not just the price rally for these names. You look at the volume set off built up for many of these stocks. When stocks have jumped up 10%, 15% on a single day, the volumes have been at a multi-month, multi-quarter high. So it's been chased by very strong buyers who have managed to buy into these names. Look at the delivery data on those days. The delivery percentage is also much higher. So when the quantum of volume rises, the delivery percentage rises. That tells you that many people are ready to take those stocks as per delivery. And that's another positive for many of these names, many of the stocks. So I would sense that we are in that phase where small caps and mid caps would continue to outperform. Even if the indices flatten out, like the small cap, mid caps, they flatten out as an indices, there would still be a lot of mid caps and small caps that would keep on being in the hunt, at least in terms of buyers.
Okay. Let me go across. We have Ashok Atluri joining us, Chairman Managing Director at Zentech. And at a time when it's a critical juncture for the company where they get a license to manufacture ammunition. What does this mean, Mr. Atluri? Very good morning. Give us a sense.
Yeah, so I think, we have been always at the forefront of doing R&D for anti-drone systems and anti-drone technology. And we know that we have been very successful in our ability to, deliver and, defend the country with those systems. So, one of the critical component, when we started, it was all soft kill. But now, after the Israel-Iran war, we see that there is a lot of hardware being used. These drones are autonomous. They can't be stopped with just software jamming, and hardware is very, very important. We actually need weapon systems to destroy them. So this is absolutely in that direction, that we need to provide systems that can defend the country. And this 12.7, 20, 23, and 30 mm, all the weapon systems are actually weapon platforms that have been used in the war. And even in the recent war, some of these platforms have been used to neutralize incoming drones. So this is one thing. But what we have discovered is, in addition to anti-drone systems, these weapon platforms can be used independently on naval crafts, on helicopters, on various land systems. So I think the potential for these systems is very, very large.
Interesting. But Ashok, tell me, does the manufacturing of these cannons require significant capex? And how is it that you're planning to fund it?
So we don't, what we have done is there are a lot of critical components in that. What we have done forever is, whenever there is a hardware requirement for simulator, there is a lot of hardware requirement, anti-drone systems. What we try to do is we try to do all the critical work in-house, but we outsource the bulk of the work outside because there's a lot of spare capacity in India to manufacture, in India and especially in Hyderabad to manufacture. So we outsource the manufacturing and we do the critical components in-house. And finally, the integration is also done in-house. So the capex will not be very large, so we don't need to raise any money or anything for that. It can be, it will be completely handled by the internal accruals. But again, just to keep the capex low, we try to outsource and actually have in the process of identifying partners with whom we'll be doing the manufacturing.
Ashok, hi, morning. I remember meeting you a few months back, and you were showcasing prototype for the land systems which was there. Where are we on that? And because of the arms manufacturing license now, it makes it easy for you to pitch this this prototype to all the defense forces as well. So if you can give us an idea of the kind of order that you can get from the defense forces for this vertical actually.
So the market size we are estimating is a couple of $1 billion at least, and we think that the Indian Army would be asking for this weapons to be integrated. And, as we know that L-70 was effectively used, to destroy some of the incoming drones. And L-70 was integrated by us some time back into the anti-drone system. So, so we think that these kind of, Zu-23, the other weapon systems, these will also be integrated by the forces. And what we are seeing is some of the calibers have actually been used in the Israel-Iran war, and, there will be, and their effectiveness has been proven. So there's going to be a lot of demand for these systems there. So yeah, to your question, we think that the products will be launched in the FY27 and 28. And as we launch, we are based on our interaction with both the domestic and international market. We see there's a lot of demand for this.
Do you see the RFPs getting launched in the next financial year or the FY27 for these kind of instruments, or weapons?
Yeah, we do expect these. There are a lot of RFPs in this area asking for integration with these weapons as well as independent platform requirement.
And what does this do to your guidance, Mr. Atluri? You had a top line guidance to achieve a top line of around 4,000 crore over the next couple of years. Does this only help you increase the guidance, or is this part of the guidance that you've given?
No, we still stick to the 4,000 crore guideline for the next 2 years. And if there is any revision, we'll definitely be announcing to the shareholders in some time.
Okay, Mr. Atluri, great speaking with you. Thank you so much for your time today.
Thank you.
Well, defense, that really seems to be the buzz. Kunal, any new trading ideas here?
Yeah, I think, so we were discussing BEL extensively, that's a stock which has done very well. Other than BL, I think HL is also now trying to come back into the breakout mode. The stock has done phenomenally well to come back to 4,000 plus levels. From a point when the stock was at 3,300 odd, almost like a 20% plus kind of recovery. I think it's just phenomenal for a stock like HAL. So that's another name which is looking attractive. You're looking at Mazagon Dock. That's another stock which has confirmed breakout for itself, crossing about the 2,500 plus levels initially and then moving towards 2640 mark. BDL, Bharat Dynamics, is something which has been a lot more consistent. Apparently in this leg, BDL has underperformed many of its other peers, but that's another stock to look out for.
Sunil, what's your take on the defense stocks? There has been a decent rally for many of them, and the kind of opportunity that the current geopolitical scenario is throwing up with new systems and new weapons, requirements which is now coming in. How do you see some of the defense stocks?
See, I think that because the retail has driven this rally, and Kunal was just discussing in terms of large cap, mid cap. So clearly, is the retail HNI thing which has driven this rally, and their defense is clearly a favorite for them. So in the short run, there should be a very bullish trend purely based on the overall geopolitical scenario and expectation that defense companies would benefit. But I would say that when the earnings season pans out, you will see some profit booking, and defense would be an ideal place where DIIs would book profits to generate cash. So expect some near-term volatility, but with a bullish trend. But in a medium term, I would still say it's a good sector to hold on. My only thing is that compared to the private sector and public sector, I would favor the private sector because the new age weaponry, the drones and the UAVs, I think the private sector clearly has a lead there. So if you're taking a medium-term view, I would say tilt your portfolio towards the private sector defense play a little more compared to the PSU. The PSUs are essentially driven by a sentiment kind of a thing, and they're still old world ammunition, old world artillery, and all of that. So just that, from my perspective, I would prefer the private sector. But like I said, you should have a medium-term view because in the short run, while the war uncertainty is there, defense will have a strong tailwind. But profit booking, it will probably be the first thing on which you'll go and pick the ripe mangoes.
Okay. On that note, Sunil, great to have you on the show. We'll let you go. Thank you so much for your time today. Well, awaiting for the pre-open race.